Hi there, my name is Mike Mills. I'm the managing partner and co-founder of the Legacy Advisor Group. And today is Tuesday, December 2nd before market open. You know, it's hard to believe that December is here already. Wow. We hope you and your families had a wonderful Thanksgiving. We all have so many blessings to be thankful for in this great country. And our team is so thankful for you, your friendship, and your trust. This month, I'll share an update on the market, as well as some research on the consumer. This will be a shorter version of our monthly Market Minute. Stay tuned for our next video, as it will be our annual video on the market with our friend Andrew from JP Morgan. So let's get started with an update on the market. The S&P 500 experienced a 5.5% pullback, the NASDAQ a nearly 8% pullback, and the Dow Jones a 3.8% pullback, along with the international markets represented by the MSCI AIF a 4% pullback in the middle of November. The Dow, S&P 500, and MSCI AIF have mostly recovered, but the NASDAQ is still down as of this recording. For reference, when we refer to the market, we're referring to the S&P 500, and the S&P 500 has experienced 7 pullbacks greater than 3% this year. Now, the NASDAQ was led down with the sell-off in AI, and nearly all things AI related, with more speculative companies down over 30% during this same time period. Some of this has been brought on with the recent positive news from Google and their AI Gemini and the use of their own semiconductor chips. This led to a sell-off in many things related to OpenAI, like Microsoft, NVIDIA, and Oracle. This really comes as no surprise, as we believe there will continue to be volatility in the AI space. We believe this volatility could continue for some time, but overall we see this as a selective buy-in opportunity in certain areas of the market where we have cash to invest. As we've said before, we are long-term investors and would rather spend time in the market rather than trying to time the market. Meanwhile, gold has continued to increase in value this year. The dollar index, while down for the year, has started to show some signs of increasing in value. The 10-year Treasury was relatively flat for the month and down nearly 50 basis points from the beginning of the year. And cryptocurrencies like Bitcoin and Ethereum are experiencing a rather large correction at time of this video recording. One interesting piece is that Bitcoin particularly has had a higher correlation with risk on, mainly the NASDAQ, over the years. We've seen that start to deteriorate recently, with Bitcoin nearly 30% off of its highs as of this recording. Now, there remains concern about the U.S. economic outlook following a year of many changes that we've experienced. However, most economic indices show growth holding at a steady pace as we move into 2026, and we believe this will continue to happen. We do believe the market continues to be priced for perfection, and some of the key indicators are consistent with late cycle economic conditions that could argue for greater investment caution. Inflation continues to be a concern. Our friends at First Trust just published a piece reflecting on inflation over the last 15 years. During the 10 years prior to COVID, the Consumer Price Index, or CPI, rose at an average annual rate of 1.7%. Since COVID, the overall CPI has risen at an annual rate of 4.2%. Currently, the inflation rate is between 2.5% and 3%. On top of this, it seems the political consensus in favor of keeping inflation low is starting to erode. We're not a fan of higher inflation and many things related to higher inflation, and are supportive of lower inflation in the range of 2%, which is what the Fed stated is its goal. Higher inflation tends to lead to slower growth in many different ways. One in particular is consumption, as we are a consumer-driven economy, but we're not the policymakers. With that, let's talk about the consumer. As you know, we read and listen to a lot of economists, strategists, and market commentary. One that I read regularly is David Bahnsen from the Bahnsen Group, and I've referred to him before. Recently, he spoke about the consumer. As many of you know, our economy is a consumption-based economy. Actually, personal consumption accounts for nearly 65 to 70% of our GDP, which is one of the highest among developed economies. You can see in this recent chart from our friends at JP Morgan showing the percentage of GDP from consumption, which is about 68%. David writes that while we're a consumption-based economy, consumption activity for lower and middle-income wage earners is constrained by price pressures from tariffs, and an elevated percentage of their disposable income is being diverted to rent and housing, serving to compress their activity. We agree. This is concerning and something that we're watching closely. This last chart you can see here from JP Morgan shows a decrease in consumer confidence, which has further declined as the year goes on. We believe the two correlate. Now, we don't think this will stop the mighty U.S. consumer from spending this Christmas, but we're definitely seeing discretionary spending cutting back and confidence coming down. With an economy that's so dependent on the consumer, we will continue to follow this, and it'll be very interesting to see what Washington policies will do to help with this. Here at the Legacy Advisor Group, we are a holistic wealth management firm. What does that mean? That means that we're not only looking at investments, but more importantly, how does proper planning impact and help you realize your goals? This could and often does include the collaboration with tax professionals and estate planning professionals. And if you or your family or friends could benefit from a holistic view of their plans, please feel free to share our contact information. Also, feel free to share this video with any of your friends that you think or family members that could benefit from seeing this video or any of our videos. On behalf of our whole team here, we hope that you, your family, and friends have a safe and wonderful Christmas and holiday season.